What's up, traders? It's your professor here, and today I'm going to be showing you 3 different indicators that you can use to help you become a consistent trader. Now, consistency is one of the hardest things to essentially do here, and we totally understand that. Even though last week was somewhat of a shaky week, we still managed to remain profitable, but consistency is where we always have our eyes on. If you can be consistent as a trader, then you will end up majority of the time remaining profitable. And that's the key goal when it comes to trading. So I'm going to showcase to you 3 indicators that you can use to help you increase your levels of consistency so you can navigate the correct way. So let's get into it and let's talk about what had happened today and the trades we've taken. So in today's session here, we've seen the S&P 500 continue to its path to all-time highs. Now, going into one of the key indicators that we use in our trading Discord, which has to do with our morning reports. These morning reports really give us a detailed understanding about what day trading range is, what we're going to be looking at. So we started off by highlighting what the pre-market low is. Highlighting the pre-market low is very important, and you always want to do that because essentially this is where the day started here. The market took a dip here and it hit the pre-market low. I mentioned this on Twitter that we could potentially see a pop from this point and go to the pre-market high. This is exactly what had happened today, and the reason why we benefited off 2 SPX calls that we called out, and one we earned 125%, and the other we ended up making a easy 85% as well. So these 2 calls that was called out over here was all based off the assumption that this pre-market low would be a great entry point for calls, and this pre-market high would be the potential exit point, which we used in the details of our model here. Now, other than that here, I'll explain the indicator shortly, but in our war room report, we highlighted this pre-market low, and then we got the pre-market high, which gave us a good understanding of what a potential inside day looks like for the market. Now, going into the details here, we've seen that the key trading range that we had set up was that the market would likely trade in the 67.10, 67.50 range here as well. The distribution for probabilities looked exactly the same as it did on Friday. So we had a good understanding of what this market overall was looking like. And in the room itself, we had many different call outs, right? We started our day off by basically calling out Taiwan Semiconductor. So if we go into our trades here, so the first play that we had called out was Taiwan Semiconductor's 320 calls here, okay? The reason why we had called this trade out here had to do with the fact that Taiwan Semiconductor, TSM, was in our breakout range. So it got through level 1, started to really spike over here. We also noticed that LRCX was also looking strong and hit close to our level 2 bullish here, which confirms a trend, which is a sign that semiconductors were very strong. According to our SMH index here, it's also was in the bullish breakout zone, which is a good indication that the semiconductors remain strong. So that was our first trade of the day. It did hit our standard minimum, which was 50%, qualified for a good trade there. We're still holding that. We also tried to buy A-Lab. We talked about that during our morning report, how it could surge along with AMD. We then took App 11 620 puts. Now these App 11 620 puts was a banger trade. We made around 80%. You know, had we held that into the news, we would have made a massive gain. So the reason why we took this is that, and we initially wanted to swing it, but I pretty much bought it anticipating that it would hit this level 1 bearish, which it actually did. It hit this level 1 bearish, key support, and it bounced all the way there. It bounced 20 points before news came out that they were being probed by the SEC for their data collection practices. It dropped from 673 to a low of 542 off that news here. So if we had held those puts, we would have been up 70 points here, which would have been a massive win if we had held. You know, we could have turned this $3 to $80 if it had benefited us, but unfortunately we sold it for only 80%. So other than that, other trades that we called out, you know, we mentioned app here. We sold it at around level 1 bullish. We also decided to get Broadcom calls as well, simply because, you know, Broadcom here, it should have benefited off the news for AMD, but we're just going to keep an eye on this and see how she goes. We got those SPX calls, like I already mentioned. We managed to call it out perfectly as well. Okay, so different indicators that you can use to help you become consistent is over here. The first one I would talk about here is the MACD. So the MACD is a momentum indicator that helps you understand if the edge is to the upside or the downside today. Now, this here is a 5-minute MACD indicator here, and it constantly changes. Whenever you see the blue line above the orange line, that essentially means the bullish momentum is there. And the further out they are from each other, the more likely the bulls are stronger, right? So in this case, you saw a very narrow side here, but when you look at it from a 30-minute perspective here, it gives you an overall guidance of if the trend is going to be down or not, right? So what we had seen here is if we replay back this from the beginning of the day here, so let's go back to the start of the trading day, right? The MACD currently looked like this, where it was showing signs of bearish movement here, right? So as we go throughout the day here, the MACDs started to get tighter, and it was getting more narrower, where the difference between them both started to look like it was going to converge. When I see situations like that, that might be the end of the downside trend and a potential reversal zone, which we've seen here. Now that looked like a strong reversal, like it looked like it was going to pick up, but then the volume on the buy side was actually very low here. So seeing that started to really stable out, we did make some money on the calls because of that, and that's why we were consistent on that. Another key piece of thing is to always look at the heat map and see what is moving the indicators. The heat map looked kind of bearish today because, you know, the banks were somewhat flat. You saw Nvidia red, you saw Meta red, right? Like today, Meta was one call I was looking at. It bounced right off my level 1 bearish and started to recover here, so that was very interesting. We've seen that Oracle pretty much stopped at my level 1 bullish as well, right on the money. So a lot of these inflection points are very helpful to see. You see that coin slightly broke above that, but managed to pretty much move around this inflection point here. CoreWeave looks like it hit close to my inflection point and then started to die. So a lot of these numbers are very consistent, very accurate here, even with prior to the news. App11 also bounced off my key level right there as well. So the next thing I would probably say you need to add to your arsenal to be consistent is have some sort of charting tool on the side of your screen here, okay? So this charting tool is what I use to give me an understanding of where the breakout zones are, where the chop ranges are, and where the key inflection points are. Now you need to have my model in order for you to really understand how to get that access to the indicator. You have to join our mentorship services, but this is a key that I use to keep consistent, right? In our trade logs, which we showcase over here, we're still waiting to get more details on LRCX, which was up 30% at one point. Broadcom pretty much flat all day on that, like we're break even on that. Coin just seen a high of 30%. So these trades are still active, and we're holding Taiwan Semiconductor, LRCX, Broadcom, and Coin because we are bullish for the semiconductors this week, and we're bearish on cryptos, right? So the consistency here with my mapping indicator, the reason why I'm potentially bearish on crypto here is because this Bitcoin ETF hit my bullish inflection point, and I believe it may start to go lower, and it can definitely go to $60 here, right? So somewhat leaning on the bearish side on crypto, and we're going to see if this ETF reflects it. I've never done numbers on this ETF before, but I'm trying to see if my premium model, because you're able to trade Bitcoin via ETF here, and the ETF also has options. So if I can analyze those options and inflection points, it allows me to understand that if there will be a rejection or ripper through on Bitcoin. So we'll look at that carefully here moving as well, moving forward as well. We see shop kind of stop there as well too. That was another thing I had my eye on. Microsoft, I really liked here that it ripped and managed to get through this level 2 bullish. So it looks like it's going to be on its way to 533. With all this OpenAI news, all this AMD stuff, it's very hard for Microsoft to not go down on that news, simply because they still haven't really moved much, and the news with Microsoft, large interest in OpenAI, is something that will now start to drive it. So we'll see if that continues to push forward here. Okay. So I hope you guys enjoyed this post-market recap. We'll see you guys in the next one. The last indicator, I'll leave it for a surprise in the next market recap, so that way you guys know what's going on. Okay. So once again, we'll see you guys in the next one, and take a look at our mentorship program to increase your chances of success and get guidance on where to find the best entries and exits. So we'll see you guys in the next one.